Where is investor money moving today? For years, equity mutual fund dominated inflows driven by strong market returns and rising retail participation. But January's latest numbers reveal an important shift. Equity inflows have slowed, while gold, debt, and diversified funds are attracting increasing interest. Does this mean investors are turning cautious, or are they simply becoming smarter about risk? In this episode of PF Special, we decode what the latest data tells us about how investor strategy is evolving. January saw a moderation in equity mutual fund inflows, but not a market exit. According to data from the Association of Mutual Funds in India, net inflows into equity mutual funds declined about 14% month-on-month to roughly 24,000 crore rupees. The slowdown coincided with increased market volatility. Foreign investors also pulled out close to $4 billion from Indian equities, adding to uncertainty. Yet, domestic investors did not withdraw. Instead, they became more selective about where they were investing. Systematic Investment Plan or SIP contributions remained resilient. Monthly SIP inflows stayed above 31,000 crore rupees, signaling that retail investors continue disciplined long-term investing despite short-term market swings. Investor preferences are clearly moving toward balance and stability. Flexi-cap funds recorded the highest inflows, attracting more than 7,600 crore rupees in January. Large cap and focused funds also gained traction as investors sought relatively stable portfolios and stronger earnings visibility. Meanwhile, enthusiasm for mid-cap and small-cap funds cooled. Both segments continued to receive inflows but at a slower pace. Diversification has now become the dominant investment theme. For the first time, inflows into gold ETFs surpassed collections by active equity mutual funds. Gold ETFs attracted net inflows of about 24,040 crore rupees in January. That's more than double December's 11,647 crore rupees. Silver ETFs saw an even sharper rise, drawing nearly 9,500 crore rupees compared with 3,962 crore rupees the previous month. Rising gold prices, global uncertainty, and inflation concerns are encouraging investors to use precious metals as portfolio hedges. Debt mutual funds staged a strong rebound, attracting nearly 75,000 crore rupees in inflows after heavy outflows in December. Now, most of this money moved into liquid, overnight, and money market funds, suggesting investors are temporarily parking funds in low-risk instruments while waiting for clearer equity opportunities. Overall, this trend indicates that investor participation remains strong, but behavior is becoming more balanced and risk-aware. This is not a retreat from the markets, but a recalibration of strategy. For more such in-depth explainers, follow Business Standard.